Hello, everyone, and welcome back to TradeFinder Live. It's great to be back with you all during this live trading week and trading day. I'll be introducing Rob here in just a few moments, but first and foremost, we have to cover our disclosure disclaimer agreement as we do for all of our webinars. Main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. That's the main thing to take away. Please feel free to take a screenshot if you like. Market continues to look towards the Fed Summit in Jackson Hole. Other than today's trade, it seems it's optimistic, so let's see what Rob has to say about that, and very excited to interact with you all. So in this moment in time, I'll introduce the man of the hour, Mr. Rob Roy.
Hey, everyone. Hey, Zach. Welcome to this week's Trade Finder Live. And as you mentioned, Zach, the market on pause today. I thought we might have been on pause a little bit yesterday, too, but we continued the rally to the upside, which we'll talk about in a second. But end of the week is going to be pretty wild with all the talking heads at Jackson Hole and then Chairman Powell on Friday. So we could end the week with a bang, if you will. But let's take a look at what's going on right now. So if we take a look at the charts, you can see that we are just a little bit down on the day. But if we put the moving averages on here, you can see that we're quite a bit overbought, at least as far as the S&P is concerned. So some separation there between where we're trading and the 10-day moving average. We had that gap up that hasn't been filled yet. You know how the thing goes by now. If you've been watching, gaps get filled, at least an extremely high percentage of them do, but we don't know exactly when they're going to get filled. Certainly you could envision if the Fed doesn't give the market what it wants, they're still looking for 4 rate cuts this year. I think maybe 3, but we'll see. And we're off that 50 basis point rate cut in September. We're at 25. And really think that this is just my prediction for whatever it's worth, is that Chairman Powell is going to say, yeah, the next path is to cut rates, but the speed and the timing are going to be data dependent. So I think he's going to stay neutral. I don't think he's going to be overly dovish or overly hawkish. One thing to note that came out today, the Eurozone, as you may or may not know, has already been cutting rates, and their inflation ticked up today. And that's been the fear, right? That's been the fear that the Fed has had, is that they're going to cut rates too soon and repeat the mistakes of the 70s when they cut rates too soon and inflation came roaring back. They've been very cognizant of that, very concerned about it. And maybe that data out of Europe plays in. Who knows? But it's just a noteworthy piece to factor into your mix when you're thinking about what to do trading wise. So as you can see on the chart, we're right here back up in the tap box. As I've mentioned, if we are able to continue higher from here and take out that wave 5 high that occurred in July, what happens then? Does the 5 move over? And this is just an extended wave 5. The tap box is showing us that we could go all the way to 580 or above, or does there's some sort of relabeling occur? And that's one of the cool things about the software. And by the way, if by chance you haven't gotten a copy of the software, go to hub.com. They have had AI launch. And while I'm talking about the software, going to be doing a live presentation with one of the principals of the Hub organization tonight at 8 p.m. Zach, I believe if you could, you might put that link in there. Love to have you join us if you're interested in the software, if you're interested in what's going on with the AI, how the AI works, all that. That's what we're going to be talking about tonight. And there's a few spots left in the founders opening special for the software, where you can get a grandfathered in discount price for as long as you own the software. So make sure you join us for that if you have any interest in this, the AI, how it works, any of those things. We're going to be talking about those tonight, and it starts again at 8 p.m. Eastern time. If you can't make it live, no worries, it'll be recorded. But you want to get registered for it so that you can have access to the recording and hear about it. So back to the market. I do think that this pause is needed. Like I said, I thought we might pause here yesterday. I drew this line last week as far as a little bit of resistance. It wasn't much, but it did hold there at the beginning of August, but we went right through it yesterday, and now we're getting a little bit of backing and filling, which I think is warranted. Maybe a little bit more moving into the end of the week when we hear from Chairman Powell. I don't know how many of the Fed governors will be interviewed and talking before, if they're going to be allowed to do that. But there's a lot of big wigs from the financial world that are out there in Jackson Hole. So we'll be hearing all kinds of comments on Thursday, I'm sure, before Chairman Powell on Friday. Not much else to say regarding the S&P. Let's take a look at the VIX. You can see that we did move down back into that range between 12.5 and 17.5. I noted that I was curious whether this resistance level at 17.5 for this year would act as support. And maybe we were in for more volatility, but nope, we went right through it, and we're just dead smack in the middle of that range from a volatility standpoint. Do we make it back down to 12.5? If the Fed gives the market what they want, likely to happen. If they don't, maybe we come up and test 17.5 or even break above that level. But for now, just trading in a dead sideways range. I did want to go back to the S&P and show you an intraday chart of what's going on today. I look at the 3-minute chart. Many of you are aware of that. And so you get a little note here. I use 377 data points for the algorithm to check the Elliott wave pattern. So you just condense the chart until you get 377 bars, and then the algorithm kicks in, and then you can spread the chart right back out. And you can see that we did complete a wave 5 intraday that started in after hours trading, and then we've been moving down ever since. 157 point extension there means that we don't necessarily have to go back down to this previous 4. You only look for a 61.8% corrective move. So we're getting there, and perhaps we just go sideways the rest of the day after a wave 5 completes. You start to move in a corrective pattern. Looks like a zigzag there intraday. So let's see if maybe there's a little bit more to the downside to go here. And yeah, we could actually come down and get close to that wave 4 if we complete the 100% extension with a 50% B wave correction. We could come down here. So we could go a little bit lower. No, we had a tick lower, and then we came right back up to the 10-day moving average. All those rules that I tell you week after week after week, no security in any time frame. We're in the 3-minute chart. Gets too far away from the 10-day moving average. There's a perfect example of it right there. We got a little separation there, and we came right back up. And at the moment, right now, while we're talking, we are testing that 10-day moving average on the 3-minute live chart. So if you're a shorter term trader, day trader, whatever, all the rules that we talk about apply intraday as well. So I'll go ahead and take this off because it's a little bit too many lines on the chart. So anyway, let's move on to the rest of the markets. We'll look at the Dow, and you can see, first of all, what's noteworthy, no 5-wave pattern currently on the Dow. I find that interesting. If we spread the chart out, you can see, and I had drawn this line if we turned back, and that was the end of last week, to see if we were going to have a pattern of lower highs. Well, we still have that. Another thing about the software is when you draw lines on there, it remembers them. You don't have to keep doing it every time. Remembers what you looked at in the past, which I think is a really handy feature. And you could also make an argument now, if we remove this line and add in the lower trend line here, that we're forming a bit of a symmetrical triangle here. We certainly have the pattern of higher lows coming off that ugly Monday, and then a set of, at least for now, lower highs. If we break out of that trend line, then all that goes away on the Dow. But pretty interesting that the Dow is forming a bit of a triangle here. We take a look at the Qs. The Qs had a little bit of resurgence, as you know, with rates going down. We'll look at rates in just a moment. And we've broken above this B wave, so we need to take this zigzag off as we took out that 61.8% level. Surprising to me there as well that we didn't have more trouble there, as you've probably aware if you've heard me again on these broadcasts. 61.8 is my favorite fib level because I do think it's the strongest of all fib levels. So if we go up now, you can see that we're getting very close to disqualifying this pattern at a 72% level there. There is a fib level at 78.6. But if you read Elliott's works, once you pass 70%, he felt like there was a high percentage chance that you're going to disqualify the pattern, that you're going to pass that 78.6% fib level. But he leaves it in the algorithm, noting the importance that he put on the fib levels for support and resistance. So perhaps we don't move down here. Technically, it's still qualified, but if we move much further to the upside, there's a good chance this could become disqualified. And with all that going on, we still have the large zigzag that has not reached this 100% extension yet. It doesn't have to, though. I want to point that out. Note that the B wave correction here was, just call it the 38.2% level, and you're only looking for a 61.8% extension then, and we got that. So if we moved up to 100%, that would be an extended C wave. And normally, to see if there's going to be an extended C wave, I bring in the confirming indicators. I like to look at the DMI. It's my favorite indicator to see if we're going to have an extended move. And you can see, no, there's no. In fact, really, the ADX hasn't even blinked on this move to the upside. We do have the two directional indicators crossing, with the positive directional indicator slightly crossing the negative. The more vertical these cross, the stronger the signal is. So it's not the most vertical. It's more of a 45-degree angle cross on both of them. But the ADX, by now, coming off of that Monday low, if there was real legitimate strength to this move, seems like we would have at least seen some sort of a rounding, if nothing else, of the ADX. Granted, the ADX is lagging, but by now it should have shown some sort of confirmation on this move to the upside, and it hasn't shown any yet. So perhaps we don't go up and hit that C wave extension. Maybe we do, but this move on the Qs seems to be just kind of an oversold bounce at this point in time. If we don't start to get that ADX turning up. And again, this is an odd week because everything is subject to change at the end of the week based on what Chairman Powell has to say on Friday. Let's take a look at the IWM. We look at the IWM. Again, no five-wave pattern. As you know, if you've been watching, we broke above 210. Looked like maybe we're going to go up to 230 and start a new 20-point range. We got awfully close. But it was too vertical, and we came vertically back down. We formed this ascending triangle. Another rule to talk about is an ascending triangle does not mean an upside breakout. Any triangle can break either direction. You've heard all these rules before. And indeed, in this case, we broke to the downside, and then we followed the breakout rules where once you break out from a triangle, that point of the breakout gets tested. Same rule as gaps. You don't know exactly when that's going to get filled or retraced, but it usually happens, sometimes quickly, sometimes takes a little longer. In this case, it happened rather quickly. A thing to note here on the IWM is in yesterday's high, we did fill that gap. And now we seem to be heading back down to test 210 again. Will 210 hold? That's going to be the key on the IWM. So if you're watching the IWM, I think right now you're on pause. Let's see how it does with that 210 level. Can it hold and we bounce higher? Then perhaps maybe we do head back up at least towards this 225 or maybe even 230 level. But if we can't hold 210 and we move back down into this range, we go right back to that trading range that we've had for so long between 190 and 210. So those are the keys on the IWM. I mentioned I would talk about rates. So let's bring the TNX in here. I do want to show you the dollar as well, which I will, and TLT, because a lot of you ask about that on the U.S. market updates that I do each week on the Elliott Wave Options channel. You ask great questions, and TLT comes up a lot. As you may or may not be aware, TNX is rates. So this is the 10-year, and it reflects rates. And the TLT, what I'll show you next, reflects pricing. So they're opposite. So the TLT will be up. But look what's happening here in the TNX on rates. We're forming a triangle. And I drew that yesterday or last week. And you can see we're continuing to consolidate in that triangle right around that 161.8% extension. We broke below it, but that was on that crazy Monday with the unwinding of the yen carry trade. And since then, not a big bounce back in rates, which to me is a little bit concerning. You may remember back when we were at the 100% extension, I was commenting that I don't necessarily think we want to see a move down to the 161.8% level because that's going to indicate weakness in the economy. So the bond market is still flashing warning signs. The equity market is not paying attention. It's not listening to it. It's doing its own thing. My experience over 25 plus years is never ignore the bond market. So nothing's 100%. Nothing happens every single time. But a high percentage of the time, you can take your cues when you're trading equities or derivatives from the bond market. And so I pay a lot of attention to what's going on in the bond market. You don't have to be a bond expert to be a good equities trader, a good options trader, et cetera. But you should have a working knowledge of what's going on in the bond market. I think that's important. And so when you see this, it's flashing, and we can argue whether it's flashing recessionary signs with the inversion still occurring or not, but it's definitely reflecting weakness in the economy, which brings back the question, is the Fed going to be too slow to cut rates? Are they going to cut rates fast enough? And I want to make sure everybody's aware that whether or not it's a rate hike or a rate cut, it takes time for those policy decisions, monetary policy, to work its way through the economy. It doesn't turn things on a dime. It takes time. So if we only go 25 basis points in September, really, what is that going to do? Not a whole lot. It's going to take time. So if they're not going to be aggressive at cutting rates, we're going to be well into next year before those rate cuts have an effect. How much more damage can be done to the economy between now and then? That's going to be the key. So let's look at TLT going a little bit longer on the curve. So this is the 20-year, and there's the prices moving up. So you can see prices moving up. That means money's going into the bond market. People are buying bonds. You can argue why. Is it because of fear? Is it the safe haven trade to put money into bonds? Is it foreign money coming in because our rates are still higher than other places around the world, especially the Eurozone that has already cut rates? It's interesting to see, but we're not that far away from where we were on that Monday, which I think is kind of eye-opening if you look at the amount of money that's going into the bond market. So keep those things in mind when you're making your trading decisions. Caution should factor in somewhere. You have to trade what charts are telling you, and if you have bullish charts and you really like them and they're following your trading system, the market has been going up, as we noted with the S&P. So you trade accordingly, but you note that this has been a pretty vertical move, V bottom here, if you will. If we take a look at volume, the volume, quite honestly, has not been that bad on the move up, less than on the selling days, but that's normal. That always happens. But the volume on the move back up, you could argue, was better than the volume here when we were moving up towards that wave 5. A clear indication that that wave 5 was about to run out of gas. I think that these green bars were lower. So it was decent volume on this move back up. It's just interesting that the ADX is not giving it any sort of confirmation on the move. So I find that really quite interesting. So now let's go look at the dollar. And the dollar is showing weakness again. So the dollar's moving lower. And I've mentioned before that we kind of wanted that dollar to stay in a trading range. We don't want it to get too high because that hurts international companies on the exchange rate. But we don't want it to get too low because if it gets too low, that starts to indicate problems with the economy and can also indicate globally, people worrying about the amount of debt that we have here in the US. That could be an issue as well. So we're starting to see other currencies showing strength against the dollar, and we're about to go into a rate cutting cycle. How far down is the dollar going to go? So we're in a wave three right now. And as I've mentioned numerous times, um, everybody in the Elliott wave world agrees that wave three is the strongest of all waves. But what a lot of people feel is that you shouldn't trade the wave three because it's difficult to know where the wave three ends and the wave four begins. My mantra has been over the last number of years that if you have a zigzag pattern in the wave three, you can have a general idea of where that wave three is going to end, a tradable idea if you will. So we had a 50% bounce there. Look where we are in the dollar now at 100%. Are we going to go down to this 161.8? Will this be an extended wave? So to be clear, the zigzag pattern has done its thing with a 50% B wave correction. You look for 100% extension, and then you wonder, will we go down to that further extended level, which, by the way, happens to exactly correlate with the lows that we had back at the end of December in the dollar. So I think that's interesting. Is the dollar going to go down and test the lows? I think there's a likelihood that that occurs, but we definitely don't want to see it go below that. I was a little nervous when the dollar got that low at the end of December. So if we look at the DMI, and those of you that know me know that I don't put as much weight in the DMI on downward moves as I do upward moves, and that's because the ADX tends to be lagging. I like to look at the CCI more on downward moves, so we'll look at that. But as you can see here, that ADX is strong. This is what's missing on the rest of the equity markets, with the ADX showing strength in the upward moves that we've had. It is showing strength in the downward move of the dollar. To me, that's concerning as well. So let's look at the CCI. And if we look at the CCI, we made a low there in the first week of August. We came back up to the negative 100 level. We spent a lot of time talking about 100 and the minus 100 on the CCI, and it's rolling over again, which is giving confirmation on this downward move. So I do think there's a likelihood that we see that C wave extension on the dollar, meaning we're breaking 101. And if we get down there, then I'll be watching closely. Can we hold that low? Are we just going to test that low from December? And again, personally, I don't want to see that level broken. I think that brings a whole bunch more concerns into the market than where we have right now. So I'm going to be watching the dollar pretty closely, as well as everything else that we're talking about that's going on. Let's look at the crypto world. And we're forming this triangle here. We drew this last week in the crypto show over on the Hub Financial channel. You can find it there on YouTube as well. And we're still in this triangle. So right now, Bitcoin is just consolidating. And it's really interesting to me that it's consolidating exactly at 60,000, which has acted as support and resistance. So when we're forming this triangle, this consolidation, and it happens to be right at a major point of support and resistance, to me, that means something's going to happen in the world of crypto. We're trying to eke out of the top side of that. I don't think we can count that yet. So we'll have to wait and see if we can break that. But that's a big mouth of the triangle. So 20,000 on the Bitcoin. Something significant is about to happen there. I can't tell you whether it's going to be to the upside or the downside. I know we're in a wave three to the downside, but again, if you've been following and listening, and I do feel like I've read everything that Elliott not only published, but in his personal notes, uh, triangles trump everything. So regardless of what the five wave pattern is, anything else, if you have a triangle, you go back to we can break either direction, and then the five wave pattern, the impulse patterns, even zigzags, will adjust accordingly. So let's watch and see what happens with Bitcoin. But it's going to be really interesting to see which way we go. If we look at Ethereum, it's consolidating as well. A little bit of a triangle forming here on Ethereum as well. So maybe it does go with Bitcoin. It's been lagging Bitcoin. Perhaps at some point in time that rectifies itself, but You can see the triangle formation here on Ethereum, and we're just consolidating right above 2,500. If you're long Ethereum, you want to see it back above 3,000. It's got to get back above 3,000 before we can talk about going back up to test the 4,000 level again, where we were at the end of May. And spent a little bit of time close to that in early June. Now we're down here. So, which way do we break? Does Ethereum break one way and Bitcoin the other way? That's possible. They don't have to break in the same direction, but it'll be interesting to see what Ethereum does as well, for those of you that are fans of Ethereum. Now let's take a look at the metals. I'm going to start off by showing you GLD. And we did have an alert for our alert subscribers in our speculative portfolio at ewotrader.com. And we did this as a post last week at TradeFinder. And we've got a nice breakout today. Well, we broke out, tested it, and then have run up the past few days. We did close that alert out today near the high of the day this morning. And we don't really go in and close out posts in the Trade Finder, but we do refer to it. And so if you followed GLD, then you're pretty happy right now on the upward move. We broke out of that triangle to the upside, and we didn't have all the rules followed, which is why we did it as a post rather than an idea. But yet it still worked out really well. And that's really the only open case study that we have. Before we go further and look at silver and oil and some of those, I did want to show you, and this is going to be kind of the stuff that we talk about tonight on the AI within this software. You can actually go back and see previous signals. And if we go back to, let's see, we're going to go back to the 16th. And the case study consideration for today is going to be an idea, and it's going to be on KeyCorp. Now, note that the score is below 75. We like scores of 75 or above. We already have an alert on QGEN. We didn't do GOLD, which, by the way, check this out. It hit its target on the AI today. So that one would have worked out really well, but we already had a trade on gold, so we didn't duplicate it. But KEY had gotten a little bit overbought, and it's consolidating now. So we're going to look at that as our case study consideration. Just to give you a heads up, Zach, that is going to be a post with a target price of 18.15, as you can see. So you can go back and see what the AI results were in the past by looking at this calendar, which is another cool feature. So once again, a reminder, sign up for that live webinar tonight. Not too often that we get the hub folks in an opportunity to talk to them. They're so busy working on all this stuff. So it's going to be a great session tonight. So just go ahead and show you that now. That will be the case study consideration. KeyCorp moving up towards 18.15. You can see the separation, which is why we waited and didn't do it immediately when the AI signal came out, is we wanted to see a little bit of consolidation here, and we're getting that today. All right, so let's get back over to the rest of the charts. Let's look at silver. We already looked at gold, and we noted that silver had been way underperforming gold. Would it play catch up? And that's exactly what's going on. Silver is playing catch up here. We're about to get a bullish 1030 cross. That green line, lime green line, is the 10-day moving average. The fuchsia colored line is the 30-day. That's the cross that I look for. I learned that from floor traders and market makers, ex-floor traders and market makers. The current ones never want to really share much information with you. You have to talk to those that are retired, and we're well above the 50-day moving average. You could actually argue that maybe in today's move, and you can see we're off the high of the day here as well, little separation from the 10-day moving average. But really quickly, silver is trying to play catch up. Now we're right at the 61.8% fib extension, so we do have to be aware of that. We're in a qualified 5-wave to the downside pattern. Is this going to hold? Are we going to move back down? in the metals. The only way I see that occurring is if the Fed is surprisingly hawkish. Um, that could create a downward move in the metals. But if they're middle of the road or slightly dovish, I think we could see this pattern become disqualified. But anytime you're around that 61.8% level, you have to take note and you have to be aware of it for the fact that we could reverse and go back the other way. Something to watch there as well. So everything we look at seems like we need to keep an eye on this and watch it moving forward. Oil, we actually have a strangle on this for our alert subscribers at evotrader.com. Just means we're looking for a breakout. You can see that huge triangle in the USO. Right now, we're breaking to the downside, so the strangle's profitable. But we're going to give it a little more time to see if this breakout continues. You can see we tested that level where the 161.8% extension is from the zigzag back that occurred in April and May. It's still on the chart, and that was where the low was in June. We tested that low in August. Are we coming down to test it again? Perhaps. But we are right now today, at least if oil stays here, the USO, at least going to have a confirmation day of the downside breakout. That kind of goes into maybe the economy weakening a little bit, and perhaps that move down comes in. Looking at UNG, we talked about this a couple of times. That I think we kind of nailed this one. This wave 3 did not have a zigzag in it. It was a mono wave down. And when you have a mono wave 3, it is difficult to figure out where the wave 3 is going to end. So I do agree with the folks that say that if there's a mono wave, if there's a zigzag in the wave 3, I think you have a high degree of probability of figuring out where the wave 3 is going to end. But without that, it's difficult. But we noted that wherever the wave 3 ends, we're likely to come back up and test 15 because that acted as support for a long time earlier in the year. So what was support becomes resistance, or at least gets tested. And right now we've tested that and we're consolidating a bit underneath 15. The wave 4 only went to 29%. So the wave 4 could go higher. So we could break back above 15 and set a wave 4 higher if we are indeed going to go lower in natural gas, but too early to tell. So once again, here you're just kind of watching to see what happens with natural gas. The key level just to keep an eye on is 15. If we continue to roll over and head down, maybe that wave 4, because it's green, which means it's still current. The algorithm says you're still in the wave 4. But if that turns purple and means that those waves are complete, that would be that we're in the wave 5 moving lower, and you could expect lower natural gas prices. When you add some fundamental stuff in, you're thinking, okay, we're middle of August here, towards the end. Wintertime's not that far away. As I've mentioned before, I haven't looked at the Farmer's Almanac. A lot of people that trade based on that, crops, whether or not they're trading wheat, corn, all those things, etc. They pay attention to that as far as how severe the winter is going to be. And maybe it's saying that it's going to be a mild winter. You would think that if it was forecasting a pretty significant winter time, that natural gas would have continued higher, and maybe it still does. I just find it interesting that we broke back down from 15 and haven't moved higher. I will look at that forecast before we talk again next week, because I've mentioned a couple times that I haven't looked at it yet, because I know a lot of you are interested in natural gas. So we want to see if this wave 4 does turn purple, indicating it's complete, or if we rebound, get above 15 and start higher, if nothing more than to create a higher wave 4 on natural gas. Looking at some of the international markets, just to give you an idea of what's going on there, we look at Australia. They had a big move up. With that movement up, they're resource rich. So the movement up in the metals, commodities has given a pretty good bid, as you can see down under. A little separation, especially yesterday, from the 10-day moving average. So a little bit of consolidation, maybe some backing and filling here is warranted on the EWA. And then we'll see once that 10-day moving average catches up. Do we come back down and fill this gap? Do we just go sideways? Don't know which of those two is going to happen, but I do know that the pricing of the EWA and the 10-day moving average will converge back together. Just how it happens can be either one, a move down in the actual ETF, or a combination of a move down and move up in the 10-day moving average, or simply a consolidation, allowing the 10-day moving average to catch up. Those are the ways that those come back together once they get separated. Let's take a look up north for our friends in Canada. Very similar chart to the EWA, except that we've made a new wave 5 high. It's extended above 100%. And it followed us on that ugliness on the unwinding of the yen carry trade. And talk about a vertical move. That's a little bit nerve wracking there. That's pretty vertical, moving up, separation from the 10-day moving average. So, again, I think some consolidation and backing and filling is warranted here on the EWC as well. And then if we go look over in the Eurozone, see what's going on with the EWG. Once again, two separated from the 10-day moving average. Note that wave 4 is at 80%. So that's a disqualified Elliott wave pattern that will go away. It won't be labeled much longer since it's been disqualified. So forget what the Elliott wave is showing right there. And just note that at this point in time, we are way overbought from the 10-day moving average, and perhaps we need to come back down towards the 10-day moving average, or same scenario as I mentioned with Australia, even just sideways and allowing the 10-day moving average to catch up. One of those two things is likely to occur in the EWG. And then India, let's take a look at what's going on there, whether or not you're looking at the INDA or the Nifty. We had a little bit of a triangle formation there. Wasn't the greatest triangle, admit that, but looks like India's off again. We're breaking to the upside out of that triangle. And you would have to wonder if we do make it back up to this wave 5, considering it's already very extended at 173, would the wave 5 move over, or would that relabel to a 3? You may have heard me say that it's not out of the realm of possibility to go to 261.8. But it's only happened a handful of times that, at least on things that I've been watching in my time of trading Elliott Wave since 2001. So it can happen. It has happened, but it's rare. And oftentimes when you go back and you're that extended and then you take that out, you see that relabel from a 5 to a 3. So we'll be watching that if this upside breakout continues on the INDA. Clearly, it's doing its own thing away from what else is going on around the world. We're just nice, and you have to at least respect the fact that this breakout is just nicely in a 45-degree angle here. It's not moving vertically like the EWA did or the EWC, etc. It's just a nice 45-degree angle move. I like those because those tend to hold. When you go vertically, you know the rule. What goes vertically up oftentimes comes vertically back down. But when you move in a 45-degree angle, you're still going to have corrections. The market still moves in impulses and corrections. That's the entire crux of Elliott Wave. But when you have a 45-degree angle, the corrective moves tend to be less severe than they are when the movement is a bit more vertical. All right, so Zach, that's pretty much what I wanted to share with everyone. So we'll open it up to some Q&A, and then you can come in with the last few minutes and show how to post that KEY case study consideration that's going to be for today. So with that, take some questions.
Yeah, that sounds like a great plan, Rob. Thanks for a very insightful session so far. We'll start out here with the first symbol from Abhishek. Please look into the charts for LUMN. Thank you.
Good old Lumen Technologies. Well, that's a heck of a move. No doubt it was kind of left for dead here for quite some time. You can see doing nothing, probably in very significant danger of moving to the pink sheets and not even being traded on the exchanges. You get below $1, that's what tends to happen. And it just hovered right there, just above that level. And then it caught a bid. So we certainly want to see. I don't know if this was an earnings report. I'm not familiar with what caused this move to the upside here, but significant volume came in. Now we're above 5. So that key level means that institutions that want to own this, that have an investment objective registered as aggressive growth, can now own this stock. It has to be above 5 for even the most aggressive growth institutions, ETFs, et cetera, to own it. And we're there. And it looks like it may want to continue higher. We may have a little bit of a distorted DMI with that kind of a move, but it's actually hanging in there pretty well. Now, the positive directional indicator is waning a bit, but the negative directional indicator isn't turning up. So there's been a little bit of a slowdown in buying, but the sellers have just backed away. The sellers are just letting the buyers have it right now. And even if the amount of buying pressure wanes a bit, if the sellers aren't stepping up, the stock can still go higher. So I would say that there's a likelihood that we may be able to continue this move. One other note that I would make is when you have an odd print like this, like a big move up, and again, I don't know if that was earnings or what the news was that caused that, but when you have a big print like that, it was vertical, it gapped up. So all those rules come in. We came back to the 10-day moving average. We filled this gap. We haven't filled the one down here yet, but we filled this one immediately. We did the 10-day moving average test. We held the 5 level, which is important, which means that it's likely some institutions may have stepped in here. And so I would say that there's a likelihood that we could continue up. And your point would be that once you have a print like that, oftentimes that gets retested. When you have something really wild like this happens, and then you get a big retracement back down and start to move back up. So my point is, if we continue higher up here in LUMN, we could look up towards 7.5 as a point that could get tested. Again, nothing's 100%, but that happens a lot when you have these outsized moves like that. So some people took some profits, but then it seems as though buying has resumed. Some buying, the buying is waning a bit, but as I said, until the sellers step in, the buyers will have this, and we could still drift a little bit higher. So interesting chart.
Very well.
Next one's
Thanks,
Zach.
Rob. Next up, Juan Rowe would like your thoughts on long-term oil.
Well, I've been looking at USO for oil, and we showed that. And, OPEC had come out and said they were going to start increasing production in August. I felt like that was more jawboning with the uncertainty of the election. I just can't imagine OPEC would want to do anything like that and push the price down. They would want to wait and see how the election turns out, because we know that the two parties have completely different viewpoints on domestic drilling. We don't play politics here, just talk about how the political policies in play affect the markets. And it's a neck and neck election. So I just would think that OPEC is just going to do nothing and wait and see. So the long term, which was the question, I think is going to depend a lot on who wins the election. If the Democrats win, I think you could see a renewed bid in oil. If the Republicans win, then perhaps we see a further downward move in oil until OPEC comes out and says, you know what, we're going to cut production. Forget raising production. We're going to cut production. I've noted this numerous times that OPEC has come out publicly. They did some studies. They know that there's a limited amount of oil still in the ground in the Middle East, and they want to generate as much money with what they have left as they can. So I just don't think we're going to see anything close to the prices of oil that we saw coming out of the pandemic, but we're still above 70. Basically, the general view on domestic drilling, as long as oil is above $35 a barrel, you can generate a profit on domestic drilling, and we're well above that. So I think I can't really give you a long term answer right now. I think the short term answer, if we hold this downward move today, is that we continue a bit lower towards that level I mentioned before. But the longer term, I think, is going to be highly dependent on the election results. So I think we're going to have to wait till November to give a more definitive answer there.
Interesting thought there. Next up, we're going to go over to Will. And actually, sorry, can you confirm real quick for Kevin, Rob, do you use 377 data points on the daily charts as well as the 3-minute chart?
I do. 377 is the number. And let me, since you asked that, good question. I wanted to reiterate why that. Those of you that have known me for a while, back when I was using the legacy software from Hub, I had it way up there at 1592, which is a fib number. And it was an extreme, granted, because I had noted with the standard 300 data points that from time to time, and we all know Elliott Wave charts relabel, which some people say is a negative on Elliott Wave. And I've said, no, that's a positive because Elliott Wave is one of the fastest technical indicators to adapt to the market. The market isn't static. The market's dynamic. It's ever changing. And you better have an indicator that's quick to change with it. And Elliott Wave does. And so I like the fact that it relabels a lot. However, on 300 data points, when I would compare daily charts and weekly charts, et cetera, I noticed that every now and then, it didn't happen very often, but every now and then, there would be a relabeling that if you used more data points, that relabeling would have never occurred. So I just went to an extreme number. And then in conversations with the data scientists at Hub that are very adept on Elliott Wave, obviously, because they've programmed it into the software, they said 377 accomplishes the same goal. You don't have to go to that extreme. So that's where the 377 came from. So that's what I'm using now. So yes, I use 377 data points rather than the standard 300. So thanks for giving me an opportunity to explain that.
Yeah, absolutely. And thanks for the clarity and confirmation there. Next up, we're going to go over to Will. NVIDIA, if there's time, any of you guys trading it before earnings specifically?
Um, Personally, I'm not. It's on my watch list. I'm watching it very closely because I really personally have no idea what NVIDIA may say. We came down, we tested 100. Other than that crazy Monday, we've held it pretty well. Pretty nice rally back to the upside there. If we look at the DMI, you can see that once again, the ADX really isn't showing much strength in this move. So that makes me a little bit nervous. Once again, a slight cross there, a little more buying pressure than selling pressure. But this movement to the upside here seems to be more on sellers stepping away than it is on buyers stepping in. And then we have this series of lower highs on the ADX. All those things make me a little nervous going into earnings. The ADX isn't low enough to put on a strangle, although I think that would be the play going into the earnings report. So that's telling me that maybe whatever move occurs is probably already going to be priced into the options. When you have a stock that tends to move on earnings, they price that in through the IV. And unless you get an outsized move, in other words, unless it moves more than what's programmed into the options, even with a straddle or strangle, you don't make any money. Even if you get a decent breakout move, if it's what was priced in, that extra implied volatility comes out and your trade doesn't make any money, and you can actually even lose money on a decent move. So it has to move more than what's programmed in to the earnings. And with everything considered here, I'm just watching it for two reasons. One, I think there's a trade to be had down the road on NVIDIA. We have this resistance area not too far away. So if it is a great earnings report and they blow above this level here at 135, then we're off to the races again. Perhaps we continue that wave 5. The wave 4 is labeled right at 50%, although I don't like the fact that it's one bar. I prefer when there's more bars around the wave 4. And if it's a disappointing earnings report and we come back down to test 100, if we were to break that, we're probably going to come down and fill this gap, just like we did here on that ugly Monday. You could argue, well, the gap's been filled, which it was there, but maybe we need to test that area again. So maybe we come back down towards this strong support area in the 90 range. So I feel like there's a trade either bullish or bearish after the earnings report. I'd just be nervous about picking a direction moving into it. So I am watching NVIDIA, and of course, the whole market's going to be watching to see what their earnings report says, and how strong the whole AI demand is. It still seems to be good, but even from an aggressive speculative standpoint, I almost think trying to pick a direction on this earnings report is too aggressive. So for me personally, I'm just going to wait and see, and then look for a trade after earnings.
Very well. Might be the wise decision there. So next up, we have a question here from Trip A, B, and B. Another
And
interesting one there.
What's that?
Sorry, I was saying another interesting one there, and it's longevity, especially.
Oh yeah, and you may have noted that there was a decline when Airbnb reported earnings. There was a pretty significant drawdown in activity, so showing that even though the data came out that we had a record number of cars on the road this year, the amount of people traveling now has dried up significantly. People are still traveling, still taking vacations, but it was a big hit on Airbnb. You can see this big move lower. We got a little bit oversold. All we've done now is come back up to test the 10-day moving average. We're in a wave 3 here. This is more of a stair step than a zigzag pattern. So I'll draw that for you real quickly because it gives an opportunity. You've heard me use those terms before. Stair stepping is when you have a consolidation, then you make a move in that same direction, then you consolidate again, and then you move in that same direction again, and then you consolidate again. So it looks like stairs, which is why it's called a stair step move. So that's not really a zigzag. So you can see consolidated down, and consolidating again. So you have to wonder, will there be another step down? And I think this is a difficult one to call. How long does it consolidate? My guess is that it probably consolidates a bit longer until we get some more economic news, maybe even more news on what's going to happen with rates. Eventually, if they cut rates, they will work their way through the economy and things will get better. But for now, I would say the likelihood, based on the recent history, is that we have a bit more sideways to go. And then we have to wonder, is that wave 3 done? It's still green. So the algorithm is saying we're still in the wave 3. For this, I would look at the CCI. You can see how ugly it was, and it's moved back up towards the 0 point, which means it could roll over and break back down below negative 100, which would indicate another move lower. However, when you look at the CCI, if it breaks back above, see how it came up here and tested the midpoint, the 0 point, and then came back down. Sorry, I gotta draw it on that chart. So let me make this bigger here, and you can see how it came back up there and tested the midpoint, the 0 line, and then went back down. So it looks like that's what we're doing again, that the CCI wants to come back up to the 0 point. Now, if it can break above that and get above 100, maybe we could have a bit of an upside move. But you have to watch that. And the CCI is very responsive to day-to-day movements. So that will continue over the next few days. So keep an eye on the CCI on Airbnb. But for right now, as of today, I would say the likelihood is more sideways move. And then we'll see if we can generate some sort of a bid. We do have some gaps to fill, et cetera. But there's still the possibility of another step down. We could go either way here on Airbnb. I don't think, because you could look at that and say, well, then that sounds like a perfect straddle or strangle. I just don't know if there's enough move left because we were at 170 a couple months ago and now we're down at 117. So the biggest part of the move is over. So I don't know that there would be enough of a move either to the upside or the downside to generate a gain in a straddle or strangle. So I think you have to assume this is sideways a little bit longer until we get a further indication on the CCI of what the likely next move is, moving back up to test 140 or making a new low. So yeah, that's the chart's been in the news. Thanks for asking about it. And it gave me a chance to show something different. Don't talk about stair steps very often.
Agreed. Yeah, no, that was good to see there. And how about we pass through one more symbol, and then I will show everyone how to post Key Corp on the platform.
Sounds great.
All right, we'll finish up with symbols from Greg on MSTR.
Oh, okay. Well, you're probably aware Michael Saylor has done more debt financing to buy more Bitcoin. This is more of a Bitcoin play now than anything else. MicroStrategy, and it's consolidating exactly as Bitcoin is. You saw Bitcoin is consolidating right at 60,000. MicroStrategy is consolidating right here at the 130 level. It's going to move regardless of anything else with what Bitcoin does. Pretty massive looking triangle forming here. A larger triangle, actually, than at least in length of time than the Bitcoin triangle. Watch Bitcoin, whichever way it breaks, MicroStrategy is going to follow it. That's just as simple as that. They own a ton of it, and they're buying more.
Yes, indeed. Alrighty. Well, let's go ahead and head over to the platform. I can show everyone how to interact with the. Is it a post or an idea we're going to do, Rob, for a Key Corp?
This this one's going to be an idea.
That's what I thought. Okay, we'll go with an idea here. So hopefully, yep, looks like everyone can see my screen now. We're just going to go over to the light bulb here. That's where we'll find the ideas page. Over here, we have the new idea option. Can create an idea and a post. I've said this before, but I always think it's good to repeat for anyone that might be new or just might need a refresher. A post is essentially a draft idea. The criteria is not fully met for it to be a legitimate idea that you're ready to post with a set timeline. However, if the criteria is there, then you're going to want to go with an idea. So this one here is going to be on key. And this symbol, again, will be key. And we'll say, how about key breaking up? Does that sound good, Rob?
Sounds good.
All right. And so what I'm actually
Key
going to do
turning
on this.
upside. How about that?
Sorry, what's that?
Get it? Said key turning to the upside. Get it? Turn key.
I like that.
There.
I like that. I like that. Got to get the puns in there where we can.
Yeah.
So we are going to go at a target price of 1850.
18, 15, 15, 18.15. Yeah.
And the time frame on that one?
Let's do the 3 months.
Right. So as you can see, we have these fixed intervals of time here to choose from. However, if you needed something that's not in these set time frames, you can go to custom down to the very exact day that you would like. So we're going to do, you said 3 weeks there, Rob?
3 months.
3 months. All right. And so what I'm actually going to do, I normally save this as a draft and say we're going to come back and make it pretty after, but I'm actually going to go ahead and just post this idea because I can come back and still edit the description and make it pretty right after this session is over. But we'd like to encourage you to go ahead and start interacting with this idea. If you're following along live, it's now available, as you can see, on the platform. And you can come in here, and as you click into the idea, you can now, obviously, I don't have the option to vote on it. This is my idea, but from your view, you'll be able to see agree or disagree. You can comment on what our commentary might be, or just add your own commentary. And you can start to see your votes come in real time if you like. So we'd love to see the interaction on there. It's growing at a very rapid pace, as Rob mentioned a bit earlier. I think the founders membership is about filled up, if not already. And so we encourage you to get on and start interacting and grow with the community. So it's at 2 o'clock, and I don't want to keep anyone longer than the hour they signed up for. So I'll pass back over to you, Rob, for wrapping things up.
All right, sounds good. Thanks, Zach, for everything. And yeah, for those of you that like the whole social media aspect, I love the fact that in addition to all the cool technical things, there's a social media aspect there, and you can post your own ideas and get people to vote on them and understand. Everybody is very respectful of ideas, but disagreements in the world of trading is what makes markets. So it's always interesting to see. I always welcome opposing ideas. I don't think I'm right all the time, so always interested in the thoughts of others, and you can do that there. So the interaction is great. And with that, the market, we're just going to see what happens at the end of the week. I think that's where all the volatility is going to be. Thanks so much for spending some of your trading day with us, and look forward to talking again soon. Take care, everybody.